Hi everyone, let's talk about Jumia Technologies, a company that operates as an e-commerce platform in the Africa, Portugal, Germany, and the United Arab Emirates. The market cap is quite big, 1.5 billion, health, 6 out of the 6 actually. And there's also future growth, 2 out of the 6. Revenue is forecasted to grow over 20% per year. Earnings have grown 3% per year over the past 5 years. On the risk side, currently the company is unprofitable, unfortunately. And by the way, not even forecasted to become profitable over the next 3 years. Shareholders have been diluted. That is meaning that shares outstanding keep increasing. Through the years, we saw that 2018, 47 million, currently 80 million. But good news that they didn't dilute last 12 months anything. So basically, last diluting was last year. The total sales, by the way, are volatile as well. So it decreased through the 2019 between 2020, but then once again raising. So competitors, Amazon.com, pretty big, 1.8 trillion capitalization, and ACOS. The price history and performance, we saw a lot of earning updates, and by the way, this is decreasing one day. Yeah, they lost in the one day 20%. That is because the earnings that they reported from the Q3 were not as high as it was expected. But anyway, price volatility considered as pretty same as the industry, higher than the average market volatility. About the company, founded 2012, employees almost 5,000, so big company there. Fundamental summary: 1.5 billion market cap, revenue 168, earnings minus 177. So I'm guessing that they are in this kind of stage to explore and to dominance on the markets rather than doing earnings. So I guess there's a big investments going on, and that of course affecting to the price. So we saw 2020 and February 2021 2000% growth. So that's pretty huge. And those who were buying here are currently sitting with minus 76%. That's a lot. And valuation side, TipRanks has price targets of $22 per share. That is meaning almost 50% upside. And by the way, 12-month forecast is also the same, 22. Yeah, there's an analyzed consensus is hold. On the market watch, we see pretty similar targets. So in good scenarios, $35 per share. Low scenarios 17, average 25.5. On the future growth for the companies forecasted 28%. So that we see that the earnings are forecasted to grow as well as the earnings side. So there's the forecast to the end of 2023. Revenue 250 million almost, and earnings minus 39. So I hope that they manage somehow to decrease the losses and be as soon as possible profitable. Earnings per share growth is forecasted as well as to grow. EPS in the end of 2023 is forecasted at minus 1.4. So road to go. Past performance, historical annual earnings growth increased by 3.2%. That's not a lot. Currently, company is unprofitable. Financial health side, this is good news. So the company is debt free, and they do have a lot of cash. By the way, all-time high, 638 million. Equity 534 million. 43 million, sorry. Balance sheet, that for looks green, then up in dividends. On the insider transactions, no volumes. Ownership breakdown, so general public holding 62%, institutions 26, private companies 6.5, public companies 4.6. Let's have a look at the top shareholders. Many of increasing and many of them decreasing. So the biggest, Bailey Griffith, decreasing 1.36%. By the way, here's a lot of shareholders. Blue Shift Asset Management 400, increasing. Anyway, the Finviz showing that volumes are pretty high. They are increasing, by the way, within these days. Last day were 23 million in the volumes. So, and by the way, they broke that channel that we saw. So the support level has been around 1715, I guess. And the resistance were at the 32. So you see that line. So once it hit resistance, it went down to the support level. So once again, so somebody were buying here, and it went back to the resistance level. So back and forth on the channel, and then you see this line kind of decreasing, and once they broke the support level, there could be big correction coming up, but I'm not sure. They might be testing once again. The support level would become the resistance level, but who knows, time will show. And yeah, shares outstanding increasing, total sales increasing as well, the return on equity decreasing. So if they manage to be profitable, it will be very nice. And operating margin is as well, as if they could turn that to the positive side. Net debt to EBITDA is growing. I think this is very good for the long-term investments. Very long. And yeah. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the next one.